This is our Forex blog for August 1st, 2012, and the first step of our three-step Forex trading system is to use our currency meter, which you see here, which shows you both the real-time strength or weakness of each currency. Underneath the real-time momentum, which is made up of multiple different tools averaged together, we have the 15-minute trend, hourly trend, daily, weekly, monthly. And the easy days, you have pretty much all the time frames lining up, and the intensity is very strong in that direction, and trends tend to continue. Harder days, such as today, in most of the pairs, there were exceptions, such as the pound, which was from around 230 to 720 this morning, intensely weak. 15-minute trends down, the hourly trends down, daily, weekly trend is down. So that's a very significant downtrend, and you would have wanted to sell the pound today versus some of the stronger ones, like the New Zealand. It had brief amounts of weakness, but the intensities were to the upside. Anytime you see a lot of momentum to the upside and the longer time frames are in the same direction, after the weakness is over, sometimes it's only 15 to 30 minutes, sometimes it's an hour and a half, that strength continues. Usually it'll continue for 15 to 30 minutes and sometimes for 3 hours. You never know how long the intensity, or I'm sorry, how long the trend will resume itself. In days like today, the market was more choppy, so you had up down movements in a lot of the currencies. So I'm going to showcase today, rather than go over our normal method, the three-step Forex trading system, which is basically selling the weakest versus the strongest. I'm going to show you how you can trade and make money on days that are very choppy, like today. This is a currency chart of the euro dollar, and I have 5 pips per bar, and I just have the daily pivots on there. One thing that I typically do most days before I start trading, and it has become such an integral part of my trading that I'm going to be putting these levels in each night, and they're going to actually just show up on your chart. You're probably never going to find this in any other charting program. Here's the daily chart of the euro dollar. You can see the last couple of days it's just been going sideways, and I have the volume profile on here, which shows you the most actively traded price of the day, the one in the middle, in the upper and lower value areas. When price is above the point of control, and especially above the upper value area, you tend to have more of a odds of the currency going up. Underneath the point of control, and preferably the lower value area, the market's likely to go down. And a lot of times, a lot of traders look to buy or sell the breakout of the previous day's high and low. You can see yesterday's high is around 23.30. And when the price broke out of that today, it basically went up 5 pips and came back down. So, for new traders, you can't afford to, if you only have a half an hour to hour and a half to trade, you can't afford to sit down, wait for a price that may or may not ever be broken. With the, if it does break out, you want to go at least, 10 to 30 pips your way. And so by waiting for a breakout of the value area, which is 22.94, which today also happened to be, pretty much a pip away from the daily pivot. Notice how that area acted. When price came down underneath it and went back above it, it exploded up. It came down to it, acted as support, it went up. Came down to it, went slightly underneath it by about 6-7 pips, came back above it, went up 20 pips. Came back down again, found support there. So the value area is a very key area, and I pretty much use it every day myself, at least in the euro dollar, euro yen, pound dollar, pound yen. I don't have charts of all the currencies I trade, but the ones I focus on, the ones that most people trade the majority of their trades in, the euro and pound pairs, the ones that are moving the most, those are the ones that I watch it for. But I'm going to be doing this analysis each night, putting it up on our website. And when you bring up the charts, you're going to see the center point of control area, you're going to see the upper value area, lower value area, and the trading signals that I'm continuing to work on, but I've kind of taken 2 or 3 weeks off of that by building faster tools, one of which you can see on the chart here. It's our digital signal processing based moving average. Instead of taking the 5 periods, this uses advanced digital signal processing techniques. I found, and I've been trading with, a 5-period moving average of the close shifted 2 bars to the right. And so that keeps it very fast. By shifting it to the right, you can use that as an entry and exit method. And I'm also working on enhancing are build your own trend tools to focus primarily on intensity of trends rather than the percentage of currencies trending up or down. This is one that I'm either going to get rid of the old one or release this as a secondary indicator. And you can see I have 2 trend candles, 2 FX power indexes, which now uses the faster digital signal processing technique versus the slower regular moving averages, 2 ADX trend intensities, and 2 momentum pros. I'm measuring the intensity of a 2-minute bar and a 5-minute bar, and the ADX trend of a 2 and a 5-minute, compared to all the euro pairs and all the dollar pairs. And so I found that this gives a little bit better clarity of whether the trend's going to continue or not. In other words, if the intensities aren't there, you're never going to see the green or the red be at or above this 80 level right here. So when this thing went up, hit the pivot level right here, had a slight pullback and went up again. Notice there was almost no weakness there. You get in right here at 23.14. You draw your fibs on that. Oops. Draw your fibs on this first wave here, and notice it went to the fib target slightly beyond it and then down. On this pullback right here, notice there wasn't that much weakness. So you might have considered getting in again. And guess what? It came back up again. Here's your fib target right here. It's likely to double top somewhere around here. It did not have the intensity it did before, so you get out of the trade. Now, I wouldn't necessarily have predicted nor would I have sold right here, but guess what? The market fell down and it did so with a lot of intensity, went right to the daily pivot and the point of, the upper value area of yesterday, which was at 94. Anytime the price is at or above the upper value area and it finds support there, when it breaks out again, you want to go long. So you can see, because the price in the euro dollar was above the upper value area all day, it just happened to be 1 pip above the pivot point of yesterday. You can see a nice 12 pip move up here, came down again. Now you may not have bought this because look at the intensity of the weakness, but when it came back above here and then acted as support and the weakness is gone, you might have bought here, got your 8 or 10 pips, and during this time of the day, somewhere around 11, 12, it usually dies down. If you had bought again right here, the market kind of went sideways. If you're ever in a sideways trade and it does this, and you can see, the weakness kind of disappears and you start to have some strength. If the strength shows up and it doesn't, continue up, you want to get the heck out of the trade. But, these are some of the methods that you can trade using the tools that we have and are going to be releasing. Also, one of the other ones that I love is our containment bands, and modified with the digital signal processing center line. Use a 5-minute, get rid of the average kind color here, and most of the time when these bands get hit, you can look for counter trend trades. Right here, market came down. This was a key support area. Obviously the market was very weak, but once it went back above there, very high probability. This one right here had a lot of weakness, but it was only 2 pips away from our lower band. These bands are so much faster now that we have incorporated the digital signal processing technology in there that, if it's 2 or 3 pips away from it, you don't even need to worry about it. Let me take that off there so you can see the bands are much faster to react with the digital signal processing. Now, today was a pretty dead day, but on days where the market's really exploding up or down, you'll find that without the digital signal processing, you'll see these bands, 5 to 10 pips closer to price. And so a lot of times the price shoots through them, and with the new bands, because they are 5 to 15 pips farther away, you're going to get in at a much more advantageous price point. Most of the time, it's not going to go against you too far, and you can make more money. If you get in 10 pips better price, and the price, let's say the market moves 20 pips your way, well, guess what? You've made the full 20 pips versus if you got in before and the market pulled back 10 pips against you, maybe came close to stopping you out, then goes up 20 pips. Guess what? You only made 10 pips because it went 10 pips against you, came back to break even, and then another 10 up. One of the things, the pound was extremely weak today. There were points today with the dollar from 7 to about 11 that it had some strength. So that's certainly one that you could be looking to sell. And this is, again, the build your own trend tool that I'm working on that has most of the intensity as a factor and not, it's not based on the percentage of currencies trending up or down with all of our tools. 60% of this is based on the intensity. So this was one of those examples where the market was so weak it went underneath the very fast DSP band. Once it goes crosses above the 5-period moving average, shifted to the right using our digital signal processing. And just so you can see the difference, if you take the DSP off the moving average, you'll see it shifts even farther to the right because it's more lagging. Now in this case it was only maybe 2 pips, but if you take, let's just say 10 pips or 10 trades a day, and you can catch an extra 1 pip on every trade or even 2, that's huge at the end of the week. Let me put that back on here. You know, when you wait for a pullback, you get into a trade, you have a loss, you get into the second one right here at 60, and let's say you use this for your exit 2 at 34, you just made 24 pips. And I typically will wait for 15 to 25 pip pullback. So in this case, it went above it, came back down, that doesn't count. Went above it, came back down here, I'm short, pretty much break even. It's already pulled back about 15 pips from the low here, so I'm going to take this trade here. That one worked. I'm not going to get short right here because it hasn't pulled back enough. This one pretty much has. You get short again, you make another 15 pips. You get short here, and you can see it came down a little bit, went back above it, and maybe you lost 5 pips here. You short again, wait for the it looks like the trend may have reversed, but it's not able to go above this high. The intensity is not there, so it goes down again. Guess what? 10, 20, 30 pips. Pulls up 15, 20 pips. You go short again here. And you can also use the fib targets to maximize your profits most of the time. Notice, pretty much a pip away from the fib target. So if you can get out somewhere near the lower bands right here at 93 versus 99, that's another 6 pips. So think about that when you're trading. The new techniques and enhancements using digital signal processing. And also another thing you can use, I haven't actually traded with it myself. I put it in there to see what it looks like. Some people are going to love this. I've never been a fan of the MACD, but we now have the digital signal processing version of the MACD. And I found that when it's underneath the 0 line, the center line, it tends to be a good trend identification. It's a little bit late in identifying trends for me. You can see it flipped right here. That's a couple bars late. But if the market is on a tear, or if you want to use it for counter trend trades, it's not too bad. I mean, you can see right here it flipped up, and then the market continued another 8 to 15 pips. It may not be too bad to use for divergence. In other words, if you have a double bottom right down here, and this one does not go down as low as the previous low, that's a sign that the momentum is not there anymore, and you're likely to get a nice bounce. So some people that like divergence signals are going to really like this. In other words, here's a good one. It went up. Notice the high of the MACD, pulled back and went up again. This is lower than this, and so this is a pretty decent trade right here. And you can see it pulled back about 8 pips. This unfortunately didn't have the momentum to continue on that particular wave. However, it is a pretty decent counter trend identification method.